There has been a shift in the narrative in recent times from momentum investing to value investing. Let me just highlight, how both of these categories have performed over the last 1 year or so. Now, if you look at the top 200 companies in India and the factors that you can watch out for, value has been the rank outperformer so far this year, and momentum has been one of the lagging indicators so far this year. In the last 1 month, value stocks have given you positive return to the tune of about 13%, while momentum has delivered a negative 8% return during the same time. On a year-to-date basis, value stocks have returned as much as 16.5% positive return, while momentum stocks have lost as much as 13.5% during the same time. During the last 1 year, value stocks have returned a positive 30% return, while the same time period, if you look at the momentum stocks, they have declined as much as 30%. Now, if you have a look at some of the value baskets that we have here in India, of course, the PSU basket really stands out over here, and you can see that there has been a catch-up trade that is currently going on as far as the Nifty PSU Bank and Nifty PSE index is concerned as compared to the Nifty index. On a YTD basis, the Nifty has returned nearly 8%, but the Nifty PSU Bank Index has outperformed by a 37% margin, and you have the Nifty PSE Index, which has delivered more than 20% returns since the beginning of this year. If you translate this into 1 year, you can really see the catch-up play, because the Nifty has been the outperformer during the last 1 year with 33% positive return, and you have the Nifty PSU Bank Index, which has delivered 28% return, while the Nifty PSE basket has delivered about 22%. But it's really the 3-year and the 5-year time period where you see the underperformance of the PSU basket. The Nifty in the last 3 years has given you 45% return, while the Nifty PSU Bank has declined 21%, and the Nifty PSE index has also managed to decline about 16% during the same time. In the last 5 years, while the Nifty has managed to double for itself, there has been absolutely zero change for the PSU Bank Index and about 22% return for the Nifty PSE Index. So, the larger time frame shows that the PSU stocks have underperformed, and the shorter term time frame actually shows that there is a catch-up trade in play as far as the PSU stocks are concerned. Now, there are multiple ways of playing the PSU theme. One is through direct stocks, the other one could be through an ETF route, and the other option also can be via mutual fund units as well. So let me just highlight, which are the PSU mutual funds in India that are available and which could, be helpful in playing out this theme. There are 3 funds which are PSU focused. One is the Aditya Birla Sun Life PSU equity fund. Then you have the SBI PSU fund, and you have the Invesco India PSU equity fund. On a YTD basis, all 3 of these funds have returned about 15 to 20% each. In the last 1 year, the returns have been ranging from 20 to 35%. In the last 3 years, while Aditya Birla Sun Life Equity PSU Fund does not have data going back 3 years and 5 years, but the other 2 funds have been underperformers. 4% return is on a negative basis is what the SBI PSU fund has delivered, while the Invesco India PSU fund has delivered 20%, and in the last 5 years the SBI fund has delivered more than 40% return, while the Invesco India PSU equity fund has outperformed by a margin with about 86% return in the last 5 years.